Hello and welcome to episode 20 of the Nunemaker Mortgage Podcast for the week of October 24th, 2022. In market news, the markets have actually improved a bit this week, which has been a welcome sign for mortgage rates, but there is one more important report due out this week with the core CPI inflation report due out on Friday. So this is the main inflation report that the Fed looks to. That's the number that they are trying to impact to get inflation under control. Now, also helping mortgage rates, there was the GDP report that was released on Thursday. Within that, it showed that the economy had actually grown, or GDP had risen. Now, this is just the initial reading, but within that report, there was some indicators that maybe inflation was starting to subside, which the market liked, and that pushed the 10-year Treasury yield below 4%. I know I talk a lot about mortgage-backed securities. It's very important. But the 10-year Treasury yield is also a good indicator of where mortgage rates are. And if they can stay below 4%, that'd be great for rates. And if it can move lower, even better. Some interesting statistics and reports from this week so far. You had the National Case-Shiller Home Price Index. That showed that home prices fell 1.075%. Now, what I thought was kind of interesting on this, if you take a look at 5 major markets, they were all on the West Coast. It was mostly in California. You had San Francisco, you had LA, San Diego, Seattle, and Denver. If you took out those 5 markets, which had the biggest declines, the rest of the United States was actually flat. So the headline number that people are going to see is that home prices fell 1.075%, but it was mostly contained to those 5 really hot markets. FHFA also released their house price index, and that showed that prices fell 0.7%. Although one important distinction on that, FHA, they're only reporting homes with a conventional conforming loan amount on them. So if they don't account for a property that was bought in cash or jumbo financing. So kind of take that for what it's worth. Next, in the mortgage marketing corner, I always say that your biggest advocates are your past clients. So if you're looking to get new clients, you need to look to your past clients, your current database. And if you had any clients who bought with a conventional loan, put less than 20% down the last few years, it might be a good idea to reach out to them and just let them know they might be able to have their monthly PMI potentially drop from their mortgage payment. So the Homeowners Protection Act of 1998 states how conventional PMI can be canceled, the ground rules for it. So it can be canceled at the borrower's request once they have 20% in equity. So once they hit that, the borrower has to ask for it. It might not drop off automatically, or it will drop off automatically by law once their loan amount is 78% or they have 22% in equity based upon the original purchase price or value. Now, a lot of people don't realize that there's a third way that it can drop off, and it's free. It's a no-risk proposition. If home values rise in the meantime, and this is why I'm bringing this up, they bought in the last few years, home values probably have risen, and they think that they've got 20% or more in equity right now, based upon value, and the buyer is current on their mortgage payments, they can ask their mortgage servicer to drop it early. They literally just call up their mortgage servicer and say, hey, I think I have 20% or more in equity. They'll ask for the early removal of their PMI, and typically the servicer is going to consult an automated valuation model, or an AVM. They're going to see if home prices in the area support the value. It's essentially just an algorithm. They take a look at data points, recent sales, and it'll give a score of how confident they feel in that value. Now, if they're uncertain, they may require the client to pay for an appraisal to determine that value, and they can decide whether it makes sense for them or not. But at the very least, the worst that they can hear is no. But in the best case scenario, they might have their monthly PMI drop, which could be $100, $150, $200 a month. That's going to make a big difference in their monthly payment, and you can be a hero. It's a good way to, at the very least, to talk to a client and potentially really be a hero for them. Finally, our quote of the week comes from Simon Sinek, who says, I find when you're an optimist, life has a funny way of looking after you. Have a great week, and if I can help you or any of your clients with any questions or pre-approvals, let me know. They can visit me at homeloanswithalex.com. Have a great week.